Hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Wednesday, ladies and gentlemen. We have an interesting week, relatively busy, I would say. We had busier, but yesterday the Jerome Powell's speech kind of shook the market a little bit, and gold was like going crazy. So basically, let's dig into all that. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is Wednesday, ladies and gentlemen. Wednesday, the 24th, of course, it's the 24th of September of 2025. What can I say? The market is interesting. Maybe not as exciting as, let's say, last week, but certainly I think a lot of things are revolving around geopolitics right now. We'll look into the markets. We'll see what kind of data we're getting, because we are getting data. We are getting data, important data, economic data, and yes, that is affecting as well the market. Look, before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm going to put my usual good morning in the chat room. Good morning, everyone. There we go. Yes. There we go. As I'll keep on saying, that this session is meant for kind of interaction, so not kind of, actually, and for interaction, because I'm always welcoming your questions. I'm always welcoming your comments, and certainly that can help us kind of make the show even more interesting, because again, I can, let's say, talk about more. I can talk more about stuff that kind of bothers you a little bit, in terms of market, of course. Also, just before we jump into the action here, very quickly, quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So now then, also yesterday we had a fantastic turnout on this webinar, so stay tuned for the next one. It was a good session. I was talking about RSI, applying it in real life market action, placing a few trades. So yeah, it was interesting. Different scenarios worked out, and I think that I think that it was a good one. But ladies and gentlemen, of course, you'll be the judge. You are the judge, and join me and judge me during the next webinar. Stay tuned. It's going to be at the end of October. More details will follow. Ladies and gentlemen, let's have a look at gold. I will look in a bit, but first let's deal with the indices, ladies and gentlemen. Let's deal with indices. Japan, Nikkei 225, stalling a little bit. Let's have a look at what's happening on the weekly. We are in positive territory on the cash index, but as you can see here, as you can see here, the 45,709 zone, which was reached last week, is still an important barrier. So we're waiting for either a jump above that hurdle, something like this, or actually a break of this upside line. And if we can get that break of this upside line, then yes, great. I'll consider some lower areas. But at the moment, not everything is kind of, let's say, that straightforward. In terms of economic data from Japan, look, we got the on this morning, we got the S&P Global, the estimates of the composite manufacturing and services PMIs for Japan, and the problem here is the manufacturing one, which kind of dropped further into contraction territory. Now, it was already in contraction territory, but by just a little bit, it dropped to 48.4. The expectation was to go back above 50 into expansion territory, but yeah, unfortunately. Composite is okay. Services are also okay. In general, we have been getting the Also, the composite manufacturing and services PMIs, the estimates from various other countries like the US. US came out yesterday also a little bit on the lower side. Then we had UK. Before that, we had UK. UK was a terrible number here on the manufacturing side. To be honest, that number does not get outside of 50 so far, so has been on the lower side for a while now. Composite is on the lower side. Services are still okay-ish, still balancing above the 50s, but okay, let's see, because we know that the UK economy is mainly service sector driven, so this, I think, is a little bit more important than, let's say, manufacturing, because, well, manufacturing is already kind of on the low side, so, you know, not it's important, but not as the service sector. Yeah, the European Union manufacturing also on the lower side, falling into contraction. That's not good. Germany also similar story, still dropping further into contraction territory. Although the expectation was for 50. Well, okay. I mean, service and composite are okay, but the manufacturing, yes, is on a slowdown. Let's see what's happening today, ladies and gentlemen. So. We're getting the IFO business climate from Germany. Now the expectation is for a little bit of a better number, so let's see what's going to happen there. If a higher number could, of course, help support the German DAX. Building permits final coming out from the US, new home sales as well. We're looking at those, and I mean, if you're trading oil, EIA crude oil stock change, so keep your eyes on that. But apart from that, not much, because yesterday we had the action from Federal Reserve, where where Jerome Powell kind of was a little bit on the cautious side in terms of going with further rate cuts, because he said that nothing is, you know, the rate cut trajectory remains uncertain. So yeah, because again, we understand why. I mean, I kept on saying this as well, and I think that I'm not the only analyst who was saying that at the moment it seems that the focus is falling on the labor market, which is fine. However, you're forgetting about the inflation, right? I mean, and it seems like, you know, they're trying to kind of, you know, forget about one, just like focus on the other, because the other one needs more saving to do. And inflation, well, you know, we'll deal with it a little bit later, and especially when you have pressure from the White House in terms of going for, you know, those rate cuts, like, you know, forcing the Fed to go for those rate cuts. So it seems like that the rate cuts that we're going to be seeing until the end of the year could be just like, you know, for pleasing the White House in a way. So you can see that at the end of October we're going to get another cut by 25 basis points, and December as well we're going to get another cut. So basically 2 cuts by the end of the year. That's what we're going to get. Look, I'm not going into next year yet because that's all uncertain. So for now, let's deal with what we have. Coming back to the economic data. Look, we had the Japanese numbers, and tomorrow, Thursday, BOJ monetary policy meeting minutes. Right. Okay, we could see a little bit of volatility in there, but are we going to find out something new? I really don't think so. US GDP final growth rate Q-on-Q is coming out tomorrow, so it's a very big expectation. Let's see if we actually meet that. But then, of course, what I'm going to be watching very, very carefully is going to be Friday's data. Friday, we're getting the PCE, the Fed's beloved inflation metric, which at the moment is expected to tick up a little bit. If so, again, this is, like I said, this is where it's raising concerns of, you know, going for those further rate cuts. Look, for now, everything is kind of stimulating the market, but as I mentioned to you recently, the problem with the rate cuts is that of course it can always backfire. In general, it's seen as a good thing for the stock market, but I think it depends on the timing, on the context in general, because let's say right now the market might think that if we suddenly continue seeing those rate cuts happening, maybe the market will say, wait. Maybe the Fed is seeing some problems and the economy is not that good. Why are we actually going for that many cuts? Maybe the stock market should maybe we should be, I don't know, taking a little bit of profits off the table, because to see what effect it will have on the lower rates will eventually have on the market. So you have this concern that yes, great, lower rates are fantastic, cheaper lending, congratulations everybody, right? But at the same time, if the market suddenly gets worried, why are we going? Why do we actually need those cuts? Although, of course, again, there's several, schools of thought, and everybody's debating this, that maybe because, let's say, Europe is at around 2%, so we need maybe something closer to that, and that's why maybe around 3 that we need. So 4 is a little bit too much. Again, like I said, these thoughts. Okay, look, I would say this way. For now, let's go with the flow. For now, we know that there will be some more cuts, which means that the stock market could remain somewhat elevated until the end of the year. Again, theory for now. Looking at this picture, yes, I'm cautiously bullish, but if we can get a nice clearance of the 45,709 zone, I'm going for the upside. China 50, beautiful move away from this upside line. Look, I talked about this on Monday. I said to keep your eyes on this upside support line. My problem right now is only one, that we are looking, okay, if it would have been only 3 candles here to the upside, I would say it looks like the bearish 3 method, where with the first candle is like this, a big one to the downside, then the second, third, and fourth consecutive candles are, the bodies of those candles are within the body of the first candle, and then the 5th candle kind of sells off. But again, maybe this is a little bit of a more of a complex bearish, like not the bearish 3, but maybe he's going to be like a bearish 4 or 5. I'm making this up, to be honest. But look, I would say this way: just instead of kind of focusing on that pattern, focus on the fact that we're holding above this upside line. If we get a nice clearance of that one and we fall, when we fall below it, then I will consider some moves to the downside, especially if we clear this little hurdle here near the 14,863-ish area. US 30, which is the Dow Jones Industrial Average. Look at this beautiful move. I talked about this rising wedge pattern, and look at this beautiful thing here. So we had a great move yesterday. We had a push higher, but then the market got spooked by Jerome Powell, and there we go. We created a new all-time high and drifted back down. Look, to me, this looks like a possible reversal little signal. Again, I talked about this before, and I'll probably going to repeat myself again. So when it comes to technical analysis, looking at this, when it comes to all-time highs, whenever we travel higher and then we basically go create a new high for the day, that day we overcome the then previous all-time high, but then we close below the previous all-time high. Now that to me is a little bit of a worrying sign, and looking at this picture, seems like a shooting star here, and well, let's see if this is not going to end up being a reversal signal, short-term reversal signal. Let me just double check something. Yep. Just wanted to quickly double check an image. Yes. So yeah, like I said, this also, in addition to that shooting star moment, is the possibility of a rising wedge, and so far it looks like one. Yes, it got violated here, but that's fine. This happens normally, and it's okay. If we in general, these patterns tend to break to the downside, right? We know that. But confirmation break through the lower side is still needed. So long story short, we're waiting for that confirmation. Let's get that confirmation break. If we can get that, amazing. I think more sellers here could join in. We could see this one traveling a little bit more south. The S&P 500, great move as well. Look at this. We went for an all-time high. Let me just double check something here. 669847. Oh yes, briefly, just by a tick, we hit a new all-time high yesterday, and then we closed below the previous. So yeah, also looking like a little bit of a bearish indication. So look, I will say it this way: if we were looking for some higher levels, wait for a push above the current all-time high. If you're looking for some downside, there is a good opportunity right now. However, I think that maybe just keep an eye on yesterday's low at least, in order to, kind of try to find some sort of an opportunity maybe for the downside. But again, don't forget about false breakouts. These happen occasionally. Nasdaq also did something like that. So 24,783. Oh yes, brief push above the all-time high. There we go. And then drifted back down. So long story short, again, yesterday's low, I'm watching that one. If we do drop below that, I'm going to consider a little bit of a move to the downside. Where's that arrow here? And why did I just click on that little thing here? There we go. Let's get rid of that. There we go. Boom. So I'm watching this, like I said, this downside scenario right here from the low of yesterday. If we also want a little bit more confirmation, keep your eyes on this steeper upside line right there. US dollar index. US dollar index is looking quite interesting, and if we do break the downside line, then yes, great, more buyers here could join in. Look, dollar index, I talked about this in my morning note this morning, and basically, yes, we had a great push, on the US dollar, because again, the bulls really enjoyed the moment, from by Jerome Powell kind of becoming like a little bit, skeptical about further rate cuts, and yeah, the bulls kind of love that. But in general, I'm going to stick to my words which I said previously, that for now, I don't think that the U.S. government needs a stronger dollar. Yes, at an expense of their own domestic consumer, but yes, they don't need the stronger dollar right now, because again, when you're selling a lot of weapons, then you don't need, you want your weapons to be as attractive as possible, price wise. So when your main buyers is Europe, so when the euro is on the stronger side, so great, for the European, they're getting a good deal. And also the central bank is, like I said, is forecasted to cut, which is also not a very good, not a very positive moment for the US dollar bulls. We continue to form lower highs. However, the 96 barrier here is the one that I'm watching, because again, we're currently, okay, it's somewhat of a descending triangle, but maybe somebody might say, oh, Darius, but maybe look, maybe it's a falling wedge pattern, which I'm not going to argue with you, could be the case as well. So we could see something like this. Maybe it is a falling wedge pattern, which according to all the tier rules tends to break to the upside. So I would say just try to play it carefully. Wait for the breakout. If we do see a break through the upper side here of this falling wedge or descending triangle, then yeah, I'm going to consider a move higher. But if we do fall below the 96 zone, yep, ladies and gentlemen, I'm getting a little bit more comfortable with the downside. German index DAX. Okay, look, the German index is holding nicely above this little territory right here. And this territory is roughly around the 23,376 here, marked by the lowest point of August. This is a good area of support so far. Let's get rid of this upside line, no longer needed. We have this downside line, which is somewhat of a good line for now. Again, very, very tentative, don't get me wrong. What I'm actually focusing a little bit more on this one is that I'm looking at the possibility of a bullish flag. We have our pole, we have our little kind of flag formation. Let's see if we can clear this one to the upside. Very quickly on the FTSE 100, ladies and gentlemen, look, the cash index drifting a little bit lower, and this one looks a little bit actually bearish, at least in the short run, like in a few upcoming days. Look, this 9,189 zone is a good area of support. If that gets cleared, I'm going to consider a move lower, but I will get a little bit more comfortable with the downside if we do drop below this upside line right here, taken from the low of the 7th of, the 28th of July. For the upside, I would prefer actually to, I will take a very conservative approach, and I'll wait for a push above this area right there, above this area between 9,340 and 58 levels. Now, looking at the Forex, jump into Forex, ladies and gentlemen. Let's see what's happening there. AUDUSD pushing back up. It's a little bit of a mess, to be honest, and that's why I want to get rid of everything and have a fresh look. We can see that the pair is balancing above the midpoint of my Bollinger Band here, which is the 20-day SMA. So we're rebounding right now. So look, if we want to see some lower levels, I think a drop below the current lowest point of this week near the 0.6575, yep, could do the trick here for a few more sellers. So I'm keeping an eye on that one. If we can get a nice clearance of this, I will go a little lower. But look, I mean, we can draw another upside line here, which is very, very tentative, don't get me wrong. Just to kind of support our downside scenario. For the upside, I would prefer to maybe just wait for a push above the highest point, the current highest point of September, near the 0.6706, and then go from there. AUDJPY, our risk on, risk off monitor, and it is pushing to the upside, right. Okay, look, it's an interesting moment here. I mean, it seems like the risk on is still on the table, and yep, we are seeing that clearly in AUDJPY. So maybe we could expect the stock market also to continue rallying. But again, maybe this is just a temporary moment here. Maybe this could reverse back down. But look, if it breaks below this upside line taken from the low of the 9th of April, then yes, I'm gonna go lower. But if it pushes above this barrier, let me just put it on the chart. If it pushes above this barrier right here, this 98.42, then yes, great. I'll consider some higher levels, but only up until this 99.16, because then if that gets cleared, I'm going to go higher. But for now, I'm not going to go higher. I'm gonna just stick to just kind of the psychological 100 level, because again, I don't have a specific level there, but maybe this could be helpful here, the 99.42, but it's like trying to find something where it's not maybe so it's roughly this area, this 99.56 50 zone. So yeah, that's a good target. So, but again, the better one is still the psychological 100. Look, let's jump into EURUSD. And looking at this picture here, this upside line is an interesting one, and this upside line is the one that I'm watching here, and if we can get a nice clearance of this, then I'm going to consider a move lower. At the moment, we're struggling with the 1.1830. If we can get a nice clearance of that area, then of this barrier, then yes, I'm going to go higher. I have drawn this Fibonacci retracement on the EURUSD here, just because again we went higher, we created this. We hit this 1.1918 zone, and now we're reversing, and it seems like we're creating a lower high. But again, I don't want to say anything yet. I mean, I don't want to say that I'm thinking of a dollar rally here, unless the DXY is going to show me that falling wedge which I just mentioned. So then yeah, maybe we could see a breakthrough to the upside. But again, for now, I'm leaning towards the downside. I'll reiterate that. I'm leaning towards the downside only if we break the upside line. If we push above the 1.1830, then yes, I'm leaning towards the towards upside. EUROJPY pushing higher, so far so good. Nobody's kind of buying the yen at this point. Still, the market is okay. But we're approaching this 175.42 zone marked by the highest point of July of 2024. So this is a good target. So let's see how we're going to play out here. For the downside, I am looking at the hurdle here, this 173.90. And if we can get a nice clearance of this one, wonderful. I think I'm going to consider a move back down. Euro GBP, one of my unfavored pairs, which I really don't like, but I still look at it. Yes, it's pushing higher. I was talking about this triangle pattern here. I mean, this squeeze. I said to you, wait for a clearance through one of the sides, and then we can consider the next move. You know, the next directional move. Well. We got the clearance through the upper side here, and well, we're approaching some key areas of resistance near the 0.8738 and 0.8756. So this is what I'm aiming for. Let's see what's going to happen next. Yep, for now it's yes, everything's pointing more towards the upside. Look. Long story short, I'm not gonna really, you know, I don't like this pair. Why? Because it has a mind of its own. It's sometimes very technical, but sometimes it's just a pain in the bottom, and well, it has, like I said, sometimes it just follows a random walk of some sort. But look, at this point it's very technical. At this point, I like it. You know, let's jump into quick glance on the Euro NZD. Continues to push higher. Oh my God, look at this. We've cleared this hurdle here, this area around that psychological 2 zone, and we remain above it. Okay, well, what can I say? We're hitting important levels here. Let me just try to find more history on the chart here, and I think I'm going to use this one. So we are looking at this. There we go. This is what I'm looking at. There we go. So this is a big chart here with a lot of data since what, 86, 87, yeah, 86. So looking at this downside line, in a way, it seems to be that there could be some upside, a lot of upside, but for now, I think that yes, we will just kind of aim maybe for. We'll aim for this peak first, 2.1170. I know that it's a lot, but judging from the way this is shaping up, I think that yes, I think that we could see some weakness in the New Zealand dollar. And look, if we can clear this barrier, I think that yes, it could go further north, potentially targeting this little inside swing low here of 2009. In general, let's face it, when this big rally happened, when the stock market was collapsing, if you remember, the little economic event which was called the subprime crisis happened. So, and this was that economic downturn. So look, for now, I would say whenever we are seeing something like that, that's like seems like a big problem happening. With this little spike we had here back in March of 2020, again, crisis, COVID hit. You know, this was 2015. I can't remember what it was. What was then? We had some sort of problem then. I'm sorry, I cannot remember. But what's interesting here is, like I said, we're targeting now. We're going for some higher levels. This is becoming again very parabolic. Eventually, this will reverse, but we don't know where the ceiling will be. And for me, at this point, the question is, are we not gonna? Is this not indicating a possible crash? Well, it's a possible turnaround. That is true. At least it seems like it's very coincidental. I'm going to draw some upside lines here, and I want to see if this is not going to be somewhat of a wedge pattern here, or just a channel, something of a channel in a way-ish. So yeah, look, I think that this is a good target here, 2.08. I think that, yeah, this is something that we could aim for. It's 2.0809. Yep, that's something that we could keep an eye on. And certainly, like I said, these things here, these are indicating some like latest market turnarounds, and to me, this is, like I said, this is a little bit of a worrying signal right now here. Let's jump into US dollar against the Japanese yen. For this one, I need a daily chart, and yep, so far we are in a range. So look, I'm gonna stick to this for now. As I said before, and I'll say it again, I'm keeping an eye on the breakout points of the of this little range where we are currently trading in. So wait for the clearance. On the upside, I have the area roughly around the 148.80. On the downside, 146.20. USDCAD. Look, I said before, and I'll say it again, it seems like we're forming something of a descending triangle pattern. This is what I've drawn here. We're near the upper side right now. I want to see if we're going to get rejected from this upper side and this 200-day EMA. I don't mind a little false breakout here, but I would prefer to see the body of the daily candle remaining inside this pattern. USDCHF very quickly pushing back up. Just basically a copy of DXY in a way, but you know, let's not get too excited here. And for now, I'm just, like I said, I'm gonna keep an eye on this little formation here, this little squeeze, and I'm gonna wait for a clearance through one of the sides of it. GBPUSD very quickly. This one's trying to move lower, but again, a break of this upside line is needed first. So if we can get that move, amazing. I will consider a move to the downside, and preferably in terms of areas, let's say breakout points, maybe 1.3452 ish zone marked by the current lowest point of this year. Oh, sorry, this week. That could maybe be a little bit more helpful. Ladies and gentlemen, let's jump into the commodity world very quickly. Jumping into gold. Yes, so yesterday we went for a new all-time high. Look, where is that? I want to show you on our channel, Markets.com. So basically, I wanted to show you that yesterday I did a little piece here on gold. Why is it like that? Yeah. No, my projections. Anyway, let me just show you. So yesterday I did a little piece on gold, and I think it's a good one, so check it out on our YouTube channel. This is the latest one in the videos section. I talked about gold. So basically the topic goes, watch this if you're trading gold. And look, my problem is as well, similar as with EURUSD. Gold rallied. Gold made good moves here, and I'll show you this on this bigger chart with more data. Look at this. This is a monthly chart. Look at this craziness here. We had a great rally here. Wonderful, right? We had big, strong rallies before. So, for example, one of the steep ones like that was back here, back in when was that? 1980. And look at this, it seems like, 40 something years, 45 years later, this is what we're getting right now. And at one point, I believe that this will correct lower. I'm not going to say that, I'm not going to say right now, let's say that it's going to do it now, but this cannot continue like that. I think that we could reach 4,000 by the end of the year. Possible, to do another like 200 something dollars on gold, piece of cake right now. It's percentage wise, it became not much, So if we would be talking about like $200 back in, let's say 2016, then yeah, that's a lot. But when we're at these levels, the percentage wise, it becomes not that much. So from here to go for that, not like that 4,000, that's like additional 6%. That's okay for gold at these levels. Here, when we were back in, like I said, 2015, let's say, or 16, to go an extra 200 points, that was like, almost what? Let me just double check this. That was like almost like 20% or something like that. Like just a little bit like that. So around 20%. That was a lot, 20% on gold, and that's why we didn't see these big moves. Of now, like I said, $200 piece of cake. Anyway, but like I said, I'm not rushing into anything yet, of course, but I'm watching this carefully because this parabolic move, to me, that's frightening because, when there's big demand like that, I'm wondering if it can be sustained or not. So, and like I said, nothing can go up all the time. Eventually, it has to go down because otherwise, it's not it's not interesting. And look, I said it before and I'll say it again that yes, central bank, big central banks, governments are buying gold right now despite the high prices. But eventually, if the stock market goes down, you would have to sell that gold. You cannot really continue buying gold. You need to sell that gold. Why? Because you need cash. You need cash to support the economy. So where are you going to get that cash from? If you're going to print, you're going to cause inflation. So why not to sell some of your gold reserves? So yeah, there we go. Anyway, ladies and gentlemen, like I said, we're keeping a close eye on this one. This is very interesting developments happening here. And for now, I'm still targeting the upside. Silver. Oof, look at this. Look at this silver. I mean, honestly, I talked about this in the beginning of this week. I said to you, last week as well, I said, keep your eyes on that 42.95 zone. And if we can get a nice move, here, then great. More buyers here could join in. I think the $45 mark is the next one, but in general, what I am looking at here is again, let's jump into a bigger chart here. I'm looking at this level. I'm looking at this target here, the 49.83. That's the all-time high. That's where we're getting, that's where we're going. And this big rally happened in 2011. Then we had a little, actually 11, we had a little financial kind of turnaround. And let me just double check. Let me just get a bigger S&P chart. 2011-ish. It was a bit of a reversal here. So 2011 April, May time, we were drifting lower, and back here in 11 also we had a turnaround. So basically everybody was selling. We had a market kind of decline, a big decline here. Look at this, from this peak here in the 11, we dropped around 20% market correction, 20%. Everybody was panicking then, but there we go, it stabilized. So silver as well, silver corrected lower. So basically you needed cash. It was the moment where governments were also buying silver, and then you start unwinding it, and then we go lower, and for a few years, for a decade, we remain on the lower side until it picks up again. So it's a long-term, very, very long-term investment here, this silver thing. And I think, like I said, I think it's it's a good one, but let's see right now where we're going to end up. Are we going to surpass that 50? I hope so. And then I will hope to see a nice strong reversal back down. Let's jump back into my markets here and look, going into palladium. Palladium, also an interesting one. And look, it's pushing higher, and according to other precious metals, this one is still on the cheaper side. Look at this. Palladium is pushing higher, and in a way, it could eventually reach those 2,000 levels. At the moment, we're around 1,250. So why not? Why not? Eventually, like I said, it will blast off at some point. But do we know that for sure? No. It's just a speculation based on historic pricing. And the same story with platinum. Well, platinum is actually at all-time highs. So forget about platinum. Forget about platinum. Platinum is already there, and it was a good run. It still is a good run, and I think it needs a correction. But at the moment, I think when we were around 1,000, this is like the optimal price. that when when you need to when you can look into it. Last year I was talking about platinum. We were around 1,000 here. I said, look, keep your eyes on that. Eventually it could pop. Copper had a good move. Let me just jump back into the daily, but for this one, for copper, I'm expecting a little bit of a decline. I'm looking at the technical picture here. It looks like a bearish flag, but I need a confirmation clearance here of this upside line. And jumping into oil, one of my beloved ones here, oil. Okay, oil pushing, rebounding from this 61.5 zone. This proves to me that I need to get rid of this downside line. This proves to me that this is just a strong area of support, which if gets broken could open the gateways towards some much lower areas. I mean, I'm targeting that psychological 60 level still. I'm still bearish on oil, but look, that's why my upside scenario is from around the $66 mark. If we push above that, maybe we could push above the 200-day EMA and we could go a little bit higher. But at this point, nope, I'm still bearish. Why? Because we're a bit low. All my EMAs here, the 50 shown as the green line, the 100 shown as the blue line, and the 200 shown as the white line, EMAs. Natural gas, very quickly on natural gas, we're still trading below that psychological 3 level, and I'm going to stick to the downside for now, especially if we fall below the 2.68 zone right there. This would confirm a forthcoming lower low. Jumping into coffee, and yes, this one dropping below the 365 zone. There we go, beautiful move lower. And yeah, the question is if we can travel towards the 100-day EMA or the 200-day EMA in the daily chart. I think so. I think 100-day EMA is the interesting target, so let's aim for that one. Then the next target for me will be the 200-day EMA. Cocoa, beautiful decline. There we go. Cleared my level, 7,205. We dropped below that. We're finding good support near the 6,822. Boom, fantastic. The next target for me is this one right here, the 6,422. But for that, I need to see a drop below the 6,822 zone. Jumping into corn. Okay, retracement. That's fine. Here we're basically I need a push above the 50% here. 50% retracement here. On the Fibonacci retracement, if I can get that push above the 200-day EMA, it opens the door to some higher levels. Sugar, my beloved sugar, beautiful reversal. Look at this, ladies and gentlemen. It is just nice. On the weekly chart, we'll get a false breakout. There we go, another false breakout. That's amazing. To me, this looks a bit more bullish, to be honest, despite showing signs of a bearish flag. But again, 15. I need a drop. I need the body. And now at this time, I don't need the body of the daily candle. I need the body of the weekly candle to remain, because this on a weekly I'm getting false breakouts. So I need a weekly candle body to stay below this 15.5 zone. If we can get that, then yeah, I'll go lower. But at this point, judging from what I'm seeing, it looks a little bit more bullish, I would say. But again, a confirmation break is needed here through this downside line, at least. Cotton. Look, for cotton, I'm going to say this, that I'm not really touching it while it's remaining in here. If we drop below the 65.7 territory, I'm going to go lower. Let's jump into, ladies and gentlemen, let's jump into cryptocurrencies for dessert. Bitcoin drifted back to my beloved 112,000 zone, which I talked dearly about for several months now, yeah, there we go, good support area here. So if we do drop below the 112,000, I'm going to lean a little bit more towards the downside. For the upside, I need to see a push above the 118,000, and then I'll go higher. Bitcoin Cash dropping below the 573. This is looking very bearish, and to be honest, this is opening the door towards the 542, and then the 526 zone right there, and then we'll just take it from there. Ethereum is still below the 4,215 area right here, so in a way, but it's finding good support near the 4,065 zone. So if we can get a nice clearance of that one, a forthcoming lower low will be confirmed. Ripple is, yes, it's holding above the 100-day EMA, shown as the blue line, but it had a brief drop here below that, and it reached the 2.7 zone. Look, this 2.7 becomes a key area of support. If we can get a nice clearance of that, then yes, a forthcoming lower low will be confirmed. For the upside, I need to see a push above the 2.95 zone right there, and then we will take it from there. Litecoin, we dropped below the upside line, and yes, basically we reached the 200-day EMA. I talked about this 102 zone, and look, what can I say? If we get a clearance of that 200-day EMA, I'm going to go lower. That's my game plan right now. Dogecoin, yep, Dogecoin is basically resting on the 50-day EMA, shown as the green line. So look, we're not far from this upside line, so in a way there is a chance still to go a little bit lower and then maybe a rebound like that. If we do break the upside line, which is taken from the lowest point of June of this year, then yes, I'm gonna go to downside like this. Polka dot very quickly, beautiful decline. I mean, after we were just here last week, right? We were going for that 5 level, it seemed like that, but then it reversed very sharply, and there we go. Look at this. I talked about this. I said to keep your eyes on this 200-day EMA. If we fall below it, I'm leaning towards the downside. There we go. Beautiful test of this upside line. And again, a beautiful test of this upside line. And now the question is, if we can break this upside line, ladies and gentlemen, I'm leaning towards the downside. I'm leaning below 4, much lower, closer maybe to 3.5 zone, or maybe even closer to 3. But again, let's not rush into things. Let's not, for now, let's keep an eye on this. Maybe, just maybe, this will end up being something of an ascending triangle pattern. And who knows? Maybe this could be a good thing right here for Polkadot. And finally, Tron. Tron is a little bit more stable, and it fell below my 0.3373 territory, but it's kind of really, like I said, it's trying to push back up. But look, the 50-day EMA is not helping. The 0.3373 territory is also not helping. So for now, everything is acting as a good area of resistance. So as long as we stay below those areas, below those hurdles, I will continue targeting the downside. I'll aim only for the 100-day EMA, shown as the blue line right here, and then we'll take it from there. My upside scenario is only from this 0.35 territory on a break of that. If we can get that clearance, I'll get a little bit more comfortable with the upside. Ladies and gentlemen, that is a wrap. That is a wrap. Thank you very much for watching and listening. I tried to be as quick as possible this time, not to drag this one way too much, but thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything. As always, ladies and gentlemen, don't forget to subscribe, and please stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. And I shall see you on Monday, because this week I'm not going to be doing any more videos this week. Basically, I'm away tomorrow and Friday, but I'll be back on Monday. Ladies and gentlemen, see you. Have a beautiful remaining week. Don't forget about the PCEs, which are coming out on Friday, because that could be a little bit of a market mover. And yeah, as always, like I said, stay safe. I'll see you later. Bye-bye.